Shares of BNY closing at another record high. It's now up more than 25% so far this year. That does outpace the S&P 500. Over a 5-year and 10-year period, though, the stock has trailed the S&P. The company recently posted earnings that beat on both the top and the bottom lines, and that stock was up after the release of it. Joining us right now in an exclusive interview is Robin Vince. He is the president and CEO of BNY. And Robin, thanks for coming in.
It's great to be with you, Becky.
Okay, so let's talk a little bit about what's happened, because BNY was underperforming its peers if you look at 5 and 10 years. It's done phenomenally well over the last 12 months. What did you change in the 2 years that you've been there to see what we're seeing right now?
Well, there are really 3 ingredients to what we've been focused on. So first of all, our people have really been responding to the challenge of how we can uplift our performance. And you can see in the stock price over the course of the past couple of years that we've been making progress.
The people contributing how?
Yeah, it's our leadership team. It's all 53,000 people in the workforce together pulling as one company. And the second point I would say is really making sure that we're bringing the whole company to bear for the benefit of our clients. We used to deliver ourselves in different bits of the company. Now we're really rallying around one BNY, helping to be more for our clients. And then the third thing.
But how did you do that? I mean, that sounds, it's like good talking points, but how did you do that? What did you specifically do to try and make everybody work in one direction?
Culture really matters. And so we started off right at the beginning by saying that we wanted everyone in the firm to act like an owner of the company. We actually made everybody owners of the company. We gave shares of BK, our stock ticker, to everyone in the firm, all 53,000 people. And we've gotten our teams to rally round to truly wanting to put clients at the center. Being client obsessed is one of the things that and that's showing up in our results. And so we are actually ending up being more for clients. We're delivering more of the solutions that we have. We're the world's largest custodian. We do have all of these market leading positions. And now we're actually delivering it for clients.
Did you change your compensation structure in other ways? I understand making everybody a shareholder. Did you do other things that would mean, okay, I'm not going to make sure that I'm doing this. This is better for our client overall, but maybe my pay structure is tied back to that general result rather than just what I do here?
Yeah, you're hitting on one of the key points of our strategy, which is culture, really getting people together. So yes.
I'm talking about pay.
I understand.
Culture follows pay.
Well, you know what? Culture is bigger than pay. And at the end of the day, pay and aligning people to that ownership mission is one thing that we're doing. But we've been improving our benefits. We've been helping people to be able, we've added new mental health benefits. We still have free coffee in our workplace. When other people shrink away from that, yeah, sure, it's an expense. It's not pay, but it's adding to the factor of rallying together as a team. So there's a lot that goes into culture.
I mean, that makes sense, Robin, but I feel like it's going to take a lot more than not taking away free coffee to get people to change in such a way that would be reflective of your stock performance.
You know, having people come into the office every day really wanting to rally around for the benefit of the client, don't underestimate the importance of what a difference that makes. Our clients feel the difference. Clients trust BNY. They trust us to be on their side. They want us to help them prepare for all the complexity that we're seeing in the world right now. And that is about culture and how people show up.
Let's talk about what's happening in the interest rate world at this point. You guys are a really big player in the Treasury markets. What do you think from the comments we heard from Chairman Powell yesterday? Where are you kind of placing your bets on where interest rates are headed from here?
Well, the good news is the economy has actually been doing well. And this has been, I think the Fed's done a terrific job getting us to the place that we are now. Chair Powell talked about it yesterday at the Economic Club in D.C. And we've been surprised, I think, to the upside in terms of the power of the economy. If we go back just to January, people were talking about 6 rate cuts. Now we're talking about sort of 2 or thereabouts. And that's a strength of the U.S. economy sort of question. That's been a nice problem to have. Now we're in and he gave a lot of comfort on this yesterday, that we're now in the stretch towards rate cuts. And so we can debate, is it going to be September? Is there a possibility in a couple of weeks in July? Do we have to wait to December? But we are in that home stretch. He is assuring us towards being able to start reducing rates and cushioning the inevitable slowdown that will probably follow.
And do you see that slowdown in the economy at this point?
Well, look, he said it very well yesterday. He thought that a hard landing was a very unlikely thing. We share that point of view at BNY. But we've had a pretty good run. And so inevitably, when with all of the higher rates for the period of time that we've now had them, inevitably there's going to be a little bit of softening at some point. The question is, how severe is that going to be? Hopefully it will be gentle. But what we're doing as a company, working with our clients, is preparing. You can't put everything on black or red. Are they going to cut rates on a particular date or not? It's about being ready. How is the world going to evolve? And rates aren't the only thing going on. The world is complicated. We've got wars, we've got other things. Clients want to be prepared for these different types of eventualities.
There's that one thing on the roulette wheel where it's not red or black.
Green, 0, 00.
Yeah. And if it hits that, you are screwed.
Well, that's
What's it called?
vigorous.
So you're right. It's not red or black. And that can really throw a wrench.
You've got to be ready. That's ultimately a statement about preparedness.
Oh, I'm with you.
Do you hear more concern from your clients? Is there this sense of concern about what's happening on geopolitics and other places where they are maybe looking for more protection? Do people trust? We've been looking at new highs every day in the markets. Do people trust that, or are they worried about what they see other places?
Markets struggle to be able to price in tail risks. And so we could all list 20 things that could go wrong in the world right now. Each of them 5%, less than 5% maybe. But if you accumulate across them, there's a decent chance that something surprising is going to happen. When we've got two hot wars going on right now, when we've got the various different elections that we're going to go through and have been going through this year, the big year of elections, uncertainty sort of rules. And so you've got to be ready for those things because it's almost certain that something surprising will happen.
Robin, we've got to run, but you all are in the process of changing your name from BNY Mellon to BNY. I still think of you guys as Bank of New York. Why the name change? And it seems like other people are taking their time kind of picking up on this.
Well, BNY is our new brand. We've got 240 years of history. We've operated across 4 centuries. We were founded by Alexander Hamilton. We've done a bunch of acquisitions over time. The name grows as you accumulate different brands, and it was just time to update it, to get us back to our roots. Bank of New York, BNY, really the core of who we are as a firm. A little bit more modern, new logo. It was time.